Hey folks, welcome back to the channel. This is Jason, host of Fighting Words Financial. Just trying to see if there's anything else playing in the background here. Doesn't look like it. Yeah, so today's video is going to be a little bit short. I did want to talk about some of the news that's out there today. And I'll be honest with you, the news cycle in terms of what you see on television has been dominated by politics in the last two trading weeks or so. And that's still the case today with everything going on in the world of politics. It's kind of taken some of the focus off of the economy, which, to be honest, is not a terrible thing. Like we always say in the investment business, that no news is good news, and that is definitely the case when it comes to individual stocks. In a lot of times, that no news is definitely good news. So lately, like I said, there's been this overshadowing of political news. There have been a few really solid, good quality things that have been happening right now. Oil prices dropped below $100 a barrel for the first time in a while. And so they just stabilized above $100 a barrel on Wednesday after a big drop. But there was a wider drop in commodity prices overall based on recession fears. And that's not necessarily a bad thing, meaning that the whole purpose of monetary policy at this point right now is to slow down the economy. And slowing down the economy, unfortunately, means there's going to be consequences to individuals out there, people who are listening to this live stream right now, that someone that is listening to this live stream is probably going to end up losing their job because of Fed policy and the domino effect of making credit more expensive. Now, they always say that the difference between a recession is when your neighbors lose their job. Depression is when you lose your job. That's kind of coming here, folks. And I don't want to make light of anyone who ends up losing their job here in the near future, but I expect us to come off of generationally low unemployment rates of 3.6%, where we've been at for the last 3 months or so. And I expect that to rise a little bit. As long as it doesn't get over 6.5%, I think I'd be fairly happy, which would be close to double what it is now. I'd be fairly happy at that level. I think that would do a lot to put a dent in inflation. But there are a lot of people that are making some predictions here about the Fed. This Fed is probably more affected by politics than any group of regulators we've had in the last 30 years or so. And a lot of folks think that they won't really have the stomach to tackle inflation as markets kind of stay down in the dumps here, and they'll take their foot off of raising interest rates. I don't necessarily know that that is true. I would say that I felt like Jerome Powell caved to political pressures back in 2018. But remember, he was also fighting fiscal policy at the same time. The federal government started spending money like crazy in 2018, creating the largest deficits we'd ever had in history, prior, of course, to all the COVID things that came out. But the budgets for 2017, 2018, 2019 were the largest budgets and the largest deficits we'd had in history. And yeah, so he was kind of fighting that as well. But it did seem like he did cave to political pressure in that time period. I'm hoping that that doesn't happen in this case, but it is going to cause quite a bit of short-term pain. There is, like I said, a little bit of good news out there, a little bit of bad news out there. What's really important news that's coming up next is release of the Fed minutes. And so, the Fed meets, those meetings are behind closed doors. They always come on afterwards, give an interview. And those interviews are pretty carefully scripted. They tend not to go off script very often. But the real meat of the discussion actually happens behind closed doors, and it's going to be these Fed minutes. And these are the four things to watch. And let's take a look at that right now. And pretty much at every Fed meeting for the next year or so, these are always going to be the things to watch. Okay. So, yeah, so minutes from the Federal Reserve's June 14th, 15th meeting reveal that central bankers have growing inflation over anxiety and plan to adopt restrictive policy stance in order to cool rapidly rising prices. Now, we've actually seen prices and commodities decline since these meeting minutes came out. Remember, this was 3 weeks ago. All right, the minutes read hawkish. This could be a little bit outdated at this point. Major stock indices, however, rose after the release as investors consider economic development since the Fed's last meeting and bet that the flagging economic growth will ultimately limit the amount of tightening that the central bank must conduct. So this is where I may disagree with sort of popular consensus on this. I was talking about how the Fed may lose their nerve, and they kind of did cave in 2018. But this is a much more serious circumstance than what we were going through in 2018. And I want to say that if you have a clear eye on history, you know that long-term inflation is rather destructive. Now, what we're not looking at in any case is prices returning to back to where they were in 2019. That is not going to happen, and that is a fantasy. That may happen for a few things, but for the most part, that's a fantasy. What we want is to stop inflation at this point. So, when the Federal Reserve in 1982 to 1983 ended inflation, prices didn't retreat back to 1973 levels. That's not what happened. It's just they stopped rising at that point, and that's kind of how inflation works. But the thing we're looking at here is whether or not the Federal Reserve was talking about further half point rises, quarter point rises, or the 3/4 point hike like they did for July. Do we have another one of those in the future? Because that was the biggest rate increase since 1994. And we want to see, and when they did that, there wasn't time for any of that and that was done at the beginning of July, rather. So these points may be a little bit outdated here, and I think that's why the market is not reacting all that strongly to anything that's coming out here. So, so take a look at this article or other articles when these Fed minutes start to become fully digested. That's really probably better insight into the economy than you're going to see a lot of newspaper articles that are out there. All right. And go ahead and fire away with any questions that you guys might have. We've seen basically 2 weeks now of, 1.5 weeks at least, of relatively stable market. We haven't seen huge declines or huge advances in the market. We are seeing inflation pressures build up around the world. The exception to that is still Japan, the only country in the world, as far as I know, where they're not really experiencing abnormal inflation. But they're also a low consumption economy. I don't know if folks have ever been in Japan, but being frugal, living below your means, and saving money for the future is a big part of their society, and they are not a consumer-based society like we are. So, but the news that dominates, Barron's here, for the most part, all has to do with inflation, and I think that's pretty important to note. And you'll see, of course, some of this stuff is the stuff that I choose to put on my Barron's account. But stocks tick lower ahead of Fed minutes. Those should be released at any time now. And by tomorrow, we should have a better idea of what's going on. So, so one of the things I wanted to talk about today is not really the serious news of the markets, which if maybe by my tone you can't tell, there's actually plenty of positive news in there as well. When the news starts to get really negative right here, and I'm searching around and looking for the little tiny positive articles that I can find, that's when I know it's kind of getting close to the point where I really want to start investing. Now, this time around, I'm not in as good a cash position as I was in 2020 or even as I was in 2009, just because my money's all invested in my businesses right now. So I have less money to take advantage of this dip that I have in the past. And I'm really kind of facing a little bit of regret that I don't have a little bit more free cash at this point. But yeah, I'm actually pretty excited for those friends, clients, and acquaintances that I know that are going to be able to take advantage of some of the long-term opportunity presented by what's going on right now. But I'm a parent, and I don't know if many of you are out there, but I had the benefit of kind of a financial mentor, my grandfather, who taught me basic things like learning how to manage your money, learning how to live below your means, what a credit score was. At least he taught me and made me aware that there were investments out there, that rich people did, and how they could make money with their money, and how it was very hard to get ahead. But once you did to invest your money, see, he didn't have like a huge investment portfolio or anything like that. He didn't set up like a trust fund for the family, and he really didn't leave much in the way of inheritance for his own children other than knowledge. And his children, for the most part, are doing really, really well, and his grandchildren are doing fairly well also. But that armed me with the knowledge that I am successful really because I had an early start on financial education. You see kids graduate from university right now who have zero financial education. They can barely balance a checkbook. Maybe they know what Robinhood is, and they've traded stocks a few times, but they're not really learning the sort of complete gamut of financial education, and that's fine. And that's you don't really go to college for that. That's something you have to learn on your own. There really is no like basic financial literacy course in high school or college. At least there wasn't when I went. And I assume there still isn't now because I'm meeting so many college graduates or talking to so many college graduates who don't have a lot of basic financial knowledge. But if you want to get your kids interested in finances, I suggest using this fun little game you can play for free. All right. This is it's basically like a test portfolio game you can play. I forget what it's called exactly. Oh, yeah. Investopedia Simulator. So I'm doing this with my kids right now. And I don't actually have 4 kids. I've just created multiple accounts. And they're actually spanking me on this. And I started looking, and they're developing these portfolios all on their own, right? And they have zero input from me. I don't know if they're watching my videos or not, but I really did this as a way to get them to think about how to invest in the future, and to think about, to think about how to invest in the future. And as I look at the stocks that my daughter here is choosing, some of these are stocks that I talk about on my channel. Some of these are stocks that I don't mention. She purchased Chevron Corporation a few weeks ago. She purchased Trade Desk a couple of weeks ago. Of course, I talk about Tesla on my channel a lot. I've talked about Snowflake at least one. I've never talked about Shopify. I do talk about NVIDIA quite a bit. I think NVIDIA is one of the most amazing companies that are out there. Never talked really about Google because I think everyone in the world covers Google, and I haven't covered anything on Airbnb in over a year. So I think it's really interesting the stocks that she has chosen here, and the amounts too kind of confuse me as far as what she's choosing. So but anyway, I think it's a really good way to get involved in at least simulating investing, to make it a game and make it fun at this point. And at some point, when she's very young, I'm actually going to give her money in an investment account and get her started on her own investing journey, with the caveat that if I give you money now at age 14 or 15, maybe I do it next year, you can't take any of that money out until you're at least 35. So I'm definitely planning on doing something like that. And it's going to be a fairly significant chunk of money too, a couple of $1,000s to start with. And that would be the caveat, of course. You can't take anything out until she's 35. The problem is with UGMA accounts, I will get taxed at my tax bracket for any gains that she makes in her accounts, which is not a great thing. The other thing is I can ask her not to access those funds before age 35, but in reality, at age 18, she can take over custodianship of those funds and withdraw whatever she wants to. Which, if you have a child who is a spendthrift, and to a degree, I don't think there's a way to train that out of a kid. So there's been a lot of research done on what it takes to be a successful investor. And really, it's the control of impulse behavior, the ability to recognize that delayed gratification can bring you greater rewards. Some of that may be ingrained genetically in us, and it's very hard to overcome that. So, but this is one of the things that you guys might want to think about when it comes to training your kids, training that next generation, how to start getting interested in investing. Because I can tell you, the biggest secret that most sort of moderately wealthy people that I know, people who are W-2 guys their entire lives, right? They got a job at 18 and they just started working, and then they retired at 65, and they retired well, meaning they were spending $25,000, $30,000 a year traveling. Their home was paid off. They were able to do whatever they wanted to do, and within reason, buy whatever they wanted, meaning they wanted that $250,000 RV. They were able to do it. What was the secret, the investing secret with these guys? The reality was there wasn't an investment secret. They just started investing very young. They didn't trade all that frequently, and they never stopped investing no matter what. right? And and there's a great deal of fortune involved with that too, meaning that no one in their family got sick, so they didn't have to take, huge amounts of money out of their retirement plan. But typically, their biggest secrets were they started really young at age 18, 19, 20. They didn't do anything special. A lot of times they really didn't know what they were doing, which actually the way a lot of 401k plans are set up right now, where you can use, target date funds, that's actually works pretty well in their favor. Those didn't exist back in the early days of 401ks, but I bet plenty of people that didn't do much besides buy an S&P 500 fund, put a little bit in small cap, put a little bit in bonds, just continue that investment strategy for 30 years, and they retired with $2, $3, $4 million, right? But it was time in the market that made it for them. It wasn't market timing. It wasn't being smart about the market. It was just investing early and investing consistently over time. That's all it took. So this is kind of the thing that, I hope that my kids are really smart investors. I hope that they're really good at this and better at this than I am over the long term. But if they're not, I still want them to be investing as early as possible, and getting used to the idea of buy and hold, getting used to the idea of time in the market is where you earn your money, learning that delayed gratification has rewards. And I think this is you don't have to use this game. There are a number of games out there that you can play with your kids to simulate investments. And this is something that I think everyone that has kids should try, right? And so yeah, let me share my screen here. I haven't really been actually, I went through that whole long diatribe, not realizing that I wasn't sharing my screen. All right. So this is Investopedia simulator. And we just started this a few weeks ago, like 2-3 weeks ago when I came back from vacation. My daughter started a little bit earlier. She's already getting an annual rate of return of 8.6%. And these are the stocks that she's chosen. And like I said earlier, very specifically, there are a number of stocks on that list that I don't talk about on my channel, and I can't remember talking about with her at all. Like, I've never talked to her about Airbnb, but she does know that I stayed in an Airbnb recently when I went on vacation. So maybe that prompted that investment there. Never talked to her about Chevron Corporation, but we have talked about oil a few times. Of course, I can't shut up about NVIDIA. Never really talked about Trade Desk, and I don't think I've talked to her about Shopify. So, which I'm not really a Shopify client either. There's not too much that I do on there. I have like a small store on there that I just kind of play around with, like one of my own. It doesn't really do a significant amount of business. In fact, it barely breaks even. But that's kind of not the point. This is not something she would have been aware of from me. This is the research that she did. And I'm super impressed that she's doing this. So, yeah, you guys fire away with any questions that you might have out there. I think this is the longest I've ever been speaking live without something out there. So, is buying the best option to make money? Is buying what the best option to make money, Anthony? What are you talking about here? Let's clarify that question. I'm happy to go down this line. But of course, when we talk about the best investment, and people talk to me all the time about what the best investment is, my answer is, it depends. It depends on what your risk tolerance is. It depends on what your timeline is. That's it, sort of thing. But yeah, that question doesn't have enough in it okay, is buying a put option. Buying a put option. Actually, right now, one of the things so remember that anytime you buy an option, by the end of the expiration period, there's about an 80% chance that it's going to expire out of the money, right? Now, you may make money in the meantime, but especially when it comes to put options, meaning would I be happy owning this stock? And what price would I be happy owning this stock? I think using cash secured puts right now is not a terrible idea, meaning you're going to sell cash secured puts out there. Meaning, let's say I want to get into Tesla, but I only want to do it at, say, less than $675 a share. That number, I just pulled it arbitrarily out of the top of my head. That number is actually meaningless to me, but it may have a meaning for you. That may be the spot where you think it is fairly valued, or that's where you're willing to jump in. So you sell a put, and you want to do it out at 30 to 45 days, right? That's where theta really becomes a factor. Theta is one of the Greeks, but theta is basically time decay, and you need to get out 30 to 45 days to really make use of time decay, right? So the closer you get to expiration, the faster theta decays. So you get kind of your best pricing with deltas around zero point 0.7 to sorry, 0.2 to 0.3, meaning there's roughly a 70 or 80% chance that expires out of the money. But with the theta in that range of 30 to 45 days is going to give you the most bang for your buck there. I like to do them pretty much like once a month to create monthly income, but it's usually at a price point where I'm pretty happy owning the stock, and I realize it's going to bounce off of that bottom. Of course, that's not always the case, right? Sometimes it blows through. Like Nvidia is one company where I don't sell any options on it just because it's so volatile that every option strategy I've ever tried is basically I've ended up having to unwind it or pay capital gains tax. So, I think in this time period right now, cash secured puts are because we have volatility, and I think we're close to the bottom. I think you can earn some extra premium and grab stocks kind of close to the bottom right now. Like right now, I'm selling some cash secured puts on Roblox. I think that there's going to be quite a bit more volatility with that stock going forward. But even if there isn't quite a bit more volatility, it's stock going that forward, and I don't get to grab Roblox at under $30 a share. Because it's so volatile, the premium that I'm earning on that is actually pretty high. So, I mean, it's a couple $100 a month, which is nice. So Nilly Furtada says, okay, so cover call and sell put do not pay a lot of premium. So, Anthony, I am trying to make money off of the premium and not make money by owning the actual call options. Like I said, if 80% of call options are going to expire out of the money, the chances that I have to make money are actually fairly low. But if I'm the one selling the call and selling the put, and 80% of those over time actually expire out of the money, then I have a pretty high chance of calling it right, especially with the more volatile stocks that are out there. Like I've been doing this with Tesla for years and years and years. And my income has grown to the point where it's anywhere from $60,000 to $80,000 a year without taking a ton of risk, right? So that's a great comment. So I'm able to earn $60,000 or $80,000 a year and taking virtually no risk that those calls are being going to be exercised. Now, every year, inevitably, when it comes with Tesla, at some point I have to unwind one of those trades, and it costs me anywhere from $12,000 to $14,000. So that's $60,000 to $80,000 actually after I've unwound one or two trades per year. Because I'll buy something with a delta of like 0.15 for Tesla, and inevitably at least once a year it's going to have a day where it goes up $200 a year, pretty close to call expiration, and I've got to unwind that trade, or I've got to pay massive capital gains on stocks that I've owned since 2011. So, but yeah, we're talking about annual gains by selling covered calls and selling cash secured and margin secured puts. Let's be honest, I use margin to sell puts. You can generate thousands of dollars of premium if you have lots of credit and have a larger account. And I do that without taking a lot of risk, mostly because I don't like to be an active trader. And when I say an active trader, I used to look at my call options all the time. Now, when I sell them out 30 to 45 days out, or I sell my puts 30 to 45 days out, I don't even look at them for like the first 2 weeks, first 3 weeks. And then it's like, just kind of check and see if they're dropping in value based on time decay, like I want them to. But Anthony, Tesla's Tesla, but you can do that on a number of other stocks too. The more stable the stock is, the lower your premiums are. The more volatile it is, the higher your premiums are. So Square is a stock where I've been doing that for a while. PayPal is a stock I've been doing that for a while. Nvidia did it for a while, but if you have more tolerance for actually the taxes that you might have to pay on gains, maybe you want to do that with Nvidia. In my case, I didn't want to realize like a large gain at any point. I really just want to sell, get away with taking the premium and never actually having to sell the stock, right? which means that sometimes I have to sell those call options, or I have to buy those call options back at a loss. And the biggest loss I took was, um, I think it was in December of last year, and I had to unwind 2 trades that cost me like $18,000 on Tesla. And at the end of the year, though, I had still made like $80,000 that year by trading options, by selling options on Tesla. So, and you can do that with all kinds of stocks, working your way up. I don't know if you guys have ever heard of something called the ladder strategy. The ladder strategy is pretty simple. You are going to choose a stock that is relatively volatile, meaning you just want it to be slightly more volatile than the stock market. Say a beta of like 1.1 would be pretty good. You're going to choose to get into the stock by selling a covered a cash secured put, or even margin secured put if you don't have too much out there on margin. You're going to sell that option at roughly with a beta of 0.7. You're going to go out about 30 to 45 days. Now, your intention here is not to own this stock long term, but to make money whether or not the stock is going up or the stock is going down, and to reinvest all of that premium that you're generating, right? So you own this stock now, or you own this, you sold this covered call at some point, it will get exercised if it has a delta of 0.3, right? Now you own the stock. You turn around right away and you sell a covered call on that stock and you pocket that premium. Once again, you're selling that covered call with a delta of around 0.7 out somewhere around 30 to 45 days to really take advantage of time decay and theta. And at some point, that's going to get exercised as well. So you recognize the gain on the stock. And if you're doing a 0.7, I'm sorry, a 0.3, a 0.7 delta on that, there is going to be some gain on that stock because it will have gone up in value. So you have to recognize some of that gain, but you're pocketing the premium. And as soon as you sell it, you're going to now sell another cash secured put. You're going to do it for no less than your cost basis on what you are. Your exit price on that stock to prevent you from losing money. And if the stock declines from there, maybe you own that stock again at a lower price. But yeah, so it's a ladder strategy. You're working way up. I probably need to do a video on this at some point, but I've been using this for years with stocks that I don't necessarily even like. It's just that they have enough volatility in that range and they're moving in the right direction. So we see here. Tim says, thanks for all your input, Jason. Do you believe in Bitcoin and do you think it will hit 100K in 5 years or so? I just started investing in the $20,000 range. So do I believe in Bitcoin is really an interesting story. Bitcoin or any other cryptocurrency really shouldn't be a religion where it requires belief. It should just work. So there's a couple of possibilities for Bitcoin. Bitcoin may just have so much historicity to it, so much historical value to it at this point that it may remain a store of value. But the developer community in Bitcoin is not as flexible as other communities are. I really expect that that beyond cryptocurrency and what it's worth, it's the utility of various networks that are really going to determine how cryptocurrency works in the future. So I can't say that I actually believe in any cryptocurrency at this point because there's nothing there for me to lend belief to. We don't know what's happening. You can go to, I recently went to like a small cryptocurrency conference and listened to a bunch of experts speak. And I realized at that point, and it's not that I realized, they flat out told me, we have no idea what's going to happen. All right. We have no idea how this is going to evolve. This is really like looking at the internet in the late 1990s. Nobody knows what's going to happen with that. I think it's very exciting. I think the possibilities are enormous. I think the government regulation in stable coins is going to help, largely because of a couple of different phenomena. It's very difficult for people to understand to grasp the idea of cryptocurrency and how it floats. We need that stable reserve of value, and that stable reserve of value has to be backed by something. They're probably going to mandate that rather than being backed by actual cash, it's going to be backed by short-term investments and government bonds of some sort. That's probably going to be the regulation that comes down the pipe. It's got to be investment-grade bonds, a mixture of short-term investments and investment-grade bonds. Probably the regulations that are coming down. So, yeah. Oh, nice. Okay, we'll talk about that. All right, so there's other questions coming out there. So, do I think it's going to be $100,000 in 5 years? Probably. It probably will get up to 100,000, back to $100,000 in 5 years or so. The problem is, I can't tell you whether or not it's going to stay there. I can't tell you whether I don't know necessarily that Ethereum might be a better investment in terms of just owning the coins or just owning the currency. But I'm far more excited about the alternatives for payment systems. There are other things that are going on right now. I don't know if you guys read the articles when it comes to blockchain, that all of the evidence for war crimes being committed right now in Ukraine, all that is being documented and stored on blockchain right now in a permanent, uneditable record that you can't censor it, you can't screw with it, you have to have consensus on the network to do this. This is going to be permanent evidence of Russian war crimes in Ukraine. That's an application that I never would have considered would have been applicable to blockchain, but there are going to be thousands of different ways that blockchain is used to make information permanent that are completely unpredictable. And what does that say about tokenomics, though? It doesn't say anything about tokenomics, like nothing at all about whether or not the value of the coin goes up. Because remember, for every currency on the planet, cryptocurrency or fiat currency, you have something that has that basically it is a limited supply or it is an unlimited supply of nothing but your imagination and faith. So currencies today are not backed up by anything physical. They're backed up generally by the claims paying ability of a government, meaning that if you own a bond denominated in US dollars, the US government will pay you because we never defaulted on bonds. So it is basically based on faith, right? There's no faith, and all the arguments that it's backed by this or backed by that, the power of the American worker or whatever, none of that is true. It is backed by the claims paying ability of the United States. What other countries on the planet have never failed to pay on their debt obligations? There's only a few that's out there, and that is what creates the stability of the US dollar and the British pound, and at this point the euro. But of course, let's remember the euro is not very old. But those are the things that underpin our financial world at this point. But what's going on right now in the development of different, decentralized finance apps and all that actually doesn't say anything about tokenomics, about how it makes that particular token more valuable. And that's one of the things you need to keep in mind. So super chat features are on, guys. If you feel so inclined, my daughter keeps telling me to remind you guys to do that. So with Neo, it does not pay. Maybe one day. Well, actually, Neo is another one of those stocks because I own so many shares of it that I've been selling options on it since 2019. And I've had to unwind trades a couple of times, but because it's so volatile, the premiums I'm making are a couple $100 a month on that without taking that much risk. So that is one of the things that I do. But yeah, so your point that stock price makes a factor or is a big factor. Yeah. So with like Xpong and Neo, on which I do trade options on there, they are fairly volatile. They're lower in price, but based on the premium that I generate off of them, because they're lower in their price and they're more volatile, it's actually if Xpong and Tesla were actually equal price, I'd be making more off of Xpong and be making more off of Nia. But you're right, price does make a difference. But depending on where you start in your portfolio on trading options, every dollar makes a difference. If I'm generating $65 a month from, or actually $20 a month by selling options on Realty Income, and the reason you only make $20 a month doing that because you want to take little risk to avoid actually having to sell the stock, but that stock is so stable. And the market for options is so thin on it that I'm making like $20, but even $20 a month counts. $100 a week is $5,200 dollars a year extra going into your account. $200 a week is $10,400 a year extra going into your account. Every dollar does count when you're trading options and you're selling them frequently enough. So yeah. So I believe stored value got wiped out. Well, Bitcoin requires a narrative, and narrative is kind of broken now. Actually, Bitcoin may require a narrative, but blockchain no longer requires a narrative. The implications of this technology are going to be far-reaching, and they're going to touch everyone's life. So we're going to see we're going to see a couple of different consensus methods emerge in the next 2 to 5 years. Of course, the big one is everyone's talking about right now is proof of stake, but even that is clumsy to a degree. And I suspect that something else is going to emerge, or proof of stake is just going to change. But the idea that blockchain, in order to be successful, requires a narrative, that's no longer the case. The celebrity status of Bitcoin and the stored value of Bitcoin, like I said, it may survive what's coming, but most cryptocurrencies are not. They're gonna fail completely. And I would like I don't know if I want to see I don't want to see regulation of new cryptocurrencies just yet. I don't want to see them deemed as being securities at this point. So, yeah. And Dewey says, according to Michael Saylor, Bitcoin is always going to be 5 times in 2 weeks. Yes. So, I mean, he's a Bitcoin maximalist. And so much so that I thought that his company he was involved with was trading Bitcoin. It was a huge oversight on my part. But so I tend not to pay attention to people who always claim the sky is falling. And in fact, there was this one guy who was briefly famous in the early 2000s, say around 2004, 2005 timeframe. And I had a lot of clients that walked into the bank that I looked at. They were like opponents of this guy. They're like, this guy says the sky is falling. You got to invest in this, got to invest in that. And I look back at the history of this guy's hedge fund, and he had to be the worst hedge fund manager on the planet, because over a 20-year period, his clients had lost on average 18% a year, which means that he didn't have a single original client from 20 years ago. Everyone would have lost pretty much all of their money at that point. And once you get down to, if you put in $100,000 and after a few years, you've got, $5, of course, you're exiting that fund. But it didn't stop at least a dozen people in a single year coming in. And it was because he had a really good, slick marketing program, and a lot of people signed up for his email thing. And so I tend not to pay attention to extremists on either side of any argument, although Michael Saylor does make better points than doom and gloom people do. So, and conflating crypto and blockchain is fatal. The US dollar is backed by the military industrial complex. See, even that argument is incorrect to a degree. The military industrial complex, which is not mythical and does exist in the United States, can't really do anything if the rest of the world suddenly decides they're not going to buy U.S. debt and they don't have faith that the government of the United States is going to pay back their debt. That would cause a collapse in the dollar, which is one of the reasons why people misplaced their collective excrement when Donald Trump started talking about renegotiating U.S. debt or not paying it back, right? That's one of the things that caused a pretty systematic and widespread collapse of the entire financial system worldwide. That is what underpins it's kind of what underpins the U.S. economy at some point. So I think the tokens are an auxiliary grift. For example, Stellar Lumen said they were going to be the blockchain behind CBDCs, and that is central bank digital currencies. Turns out they're being used, but it's just copies of their blockchain. That's actually a really important observation. Is a copy of their blockchain not their blockchain? Could it not be made a part of their blockchain? Are they really the blockchain behind CBDCs? Because the last couple of ones that I've looked at are actually backed by Algorand. So Algorand's been a giant disappointment to me. But if you this early in the evolution of this technology, there are going to be a lot of disappointments. Now, I didn't invest that much in Algorand; it was like $3,000 or $4,000. But I did it all between $1 and $2, and of course, I'm getting crushed right now. I haven't even looked at it because my crypto account's so depressing at this point. But the reality is, I don't have that much invested in it. But you are not incorrect when you say that tokens are an auxiliary grift. The existence of them is not the grift. It's all of the trading and promotion that goes around them. And the real value of what happens with blockchain is the technologies that are being developed on them. Like I said, like the storage of war crimes data on the Ethereum blockchain is something that I never expected, right? And they already have a strategy to use this data at the International Criminal Court when Russia is eventually taken there, or people from Russia are eventually taken there. Meaning they're storing all of that facial recognition data. They're storing all the evidence from, those guys sending all of the, washing machines and lingerie back to their families in Russia that they stole out of Ukraine. They're sending all of that evidence and they're storing it on blockchain. It's now public. It's now permanent. You can't edit it. You can't get rid of it. It's out there forever. Wait till somebody decides to do this with child sexual predators in the United States. That's coming. That is coming. All of that information is going to be public. It's going to be permanent and uneditable. There are people right now that have committed crimes 15 or 20 years ago before everything was put on the internet, and you can't find them. Like, I just did a pretty extensive background search on someone who got out of prison in 2012 or so, but the crime was originally committed in the 1980s. And there weren't any freely available public records where you could discover what type of crime this person committed. And I was doing this in basically helping someone find their biological family. He was one of their closest relatives, but he didn't have any paper trail beyond 2012. And I finally ended up speaking to the individual, and I got him to kind of admit what he had done. There was no public record available of that. I even asked the state for those records where he was, and they told me that there was no digital record. I'd have to request paper records, which would take weeks. Pretty soon, all of that stuff is going to be available on blockchain, and you can look it up anytime you want, right? And these are the types of things and technologies where we're getting unintended consequences from blockchain, and which I don't know if it's good or it's bad. I can imagine that being used in really terrifying ways too, especially because you have this consensus mechanism where it's going to be very hard to edit any of that data. It's going to be very hard to correct anything that's not true, right? So yeah, there are many ways that blockchain could evolve that I think are frightening. Many ways that blockchain could evolve that are pretty hopeful too. But conflating crypto and blockchain is something that folks need to stop doing. Being solely focused on tokenomics, on whether or not the token is going up in value, is something that I wish would stop, but I know it's not going to. Yeah. So here is do you know if I have to pay margin interest like 8% in my case if I sell margin secured puts? Yeah, if you sell margin secured puts, if the puts get exercised and then now you own that stock, then you will start paying margin interest. But if you're selling margin secured puts and the puts never get exercised, then you're never charged a dime of interest because you never actually borrowed money. Now, it does reduce the amount of margin you have, meaning that, if you have a 650 put on Tesla, which would be $65,000, right? And you only have, $165,000 in equity. Once you sell that put, now you only have $100,000 in equity, and you need to start worrying about not at that point. You have to go down quite a bit further to start worrying about a margin call. Generally, you need somewhere between 25 and 35% equity in your account before you get a margin call. And like I said, it's a little more, it's not flexible at all, but the numbers are probably a little bit different than what you're thinking. I should probably do an entire video just on what margin means and what marginable stocks are. But yeah, but no, you don't have to pay margin interest until that put actually exercises. And there's a good chance that it won't if you're choosing something that's pretty far out of the money. And actually, if you have margin, you can make pretty good money. Like I was selling, I had a lot of room in my margin account earlier in the year. And I think I sold like a July 15 at like 450 for Tesla and still got like $6,000 for it 4 months ago. Right. So that's getting ready to expire here pretty soon. Basically in the next week or so, and I get to do it again, right? So it's probably going to be another, and I'll probably choose a lower number this time, like around 350, which is really unlikely, but it's the time decay factor that's out there too. So I don't get to trade this every month, but I wanted to take the sort of margin capacity that I had to use it in a way that was relatively safe, meaning this put is so far out of the money that if that happened, either A, I'd be happy to own the stock at that price, or B, Tesla's going to crash and burn, right? So, and I don't believe that either I don't really believe that I didn't believe at the time that Tesla was going below 450. I don't remember if that's the exact number. I'll actually need to pull up my account and look at that to see. But no, you don't pay margin interest on that margin secured put until the put actually exercises and you own the shares. And I'm happy to pay 8% interest on margin for the most part. That's what I'm used to doing in the past. It's only been in the last I don't know 8 years or so that you haven't had to do that. But typically, margin interest rates are pretty freaking high, pretty high. So, yeah. All right, guys. So this is going to be cut a little bit short today. I have some other things to do. I'm happy to talk with you guys about option strategies. If you have questions that you want to write down ahead of time and bring those to me, I'm fine with that too. I may or may not be able to answer everything on the air. Sometimes I mean put on the spot, and let's be honest, like, this is the YouTube channel. I'm in the business professionally, but I'm not a professional presenter or anything like that. So, or professional television personality. But yeah, I'm happy to try and answer any questions you have. And I promise you, if I don't know, I'll just say I don't know. All right. Thank you very much for tuning in today. I will be back tomorrow at the same time for anywhere between 45 minutes and an hour and a half. Today, I'm cutting this one a little bit short because I have some things to do. So thank you so much, folks, and I will see you next time.